Well, hey there. Welcome back to another episode of C-Suite Unplugged, an Alberta Better podcast series. In this series, host Adam Lake talks to Alberta's top CEOs, entrepreneurs, and business leaders about their journey to the C-Suite, what keeps them up at night as an Albertan and as a leader in their industry, and what their outlook is for the future. Our guest today is Brian Boulanger, the CEO and director of ARC Financial, Canada's largest energy-focused private equity manager. And we go behind the scenes with this two-time top 40 under 40 winner to hear more about his career journey, the purpose and mission of ARC Financial, and his thoughts on the future of energy in Alberta, ESG, and what makes him excited for the future of this province.
Today, we're fortunate to have my friend and member, Brian Boulanger. Brian is the CEO of ARC Financial, a boutique private equity firm focused on the energy sector. I got to know Brian when we both served on the United Way of Calgary board, and I've been an admirer and fan of him ever since. He's a Calgary and Canada top 40 under 40 in 07 and 09 respectively, and a genuine believer in the community and our province. And we're really fortunate to have him here today. So Brian, thanks for joining us today.
Yeah, thanks, Adam. Thanks for what you do for Alberta and for Calgary and all the different things. So a fan as well.
Oh, thank you, good sir. It's a privilege to work with you and all the BCA members and the great people that help advance prosperity in our amazing province. Brian, we like to chunk out these conversations in a couple broad themes. The first one, everybody loves to get to know the CEOs themselves a little bit more. Who they were. What are some of their early influences and their story? So we'll start with that. But before we begin, maybe if you could give us your elevator pitch as to your role and the company.
Yeah, sure, Adam. So I have the good fortune of being the fifth CEO of ARC. The business was started in the late 80s and it's all been succession planning within. So I have the good fortune of being the fifth CEO, as I say, and a member of our investment committee. Having said that, ARC is very much a partnership and a significant size partnership, where we do try to make decisions as a group. And so as much as I'm the leader of the group, it's very much a team effort in what we do. And the firm itself, as I said, it's over 30 years old, and today is Canada's largest private equity firm focused on energy, with a heavy investment into a research institute that guides a lot of our thinking in terms of where to invest and how to provide advice to our companies and, quite frankly, the energy community on whole.
Yeah, you guys at ARC do phenomenal work and have really helped grow a number of really successful companies. And the work you do at the Institute with Peter Tzakin and Jackie Forrest is, I would say, probably the best in the world that I've ever seen. So we'll make sure that people have some links for that in the show notes. Brian, people love to hear the story of CEOs. Bright-eyed and bushy-tailed right out of high school, staring down the world. And I wonder if you could share with us how your career has progressed from Brian, fresh out of grade 12, and the path that you took to now being CEO of ARC.
Just grade 12? You didn't want to go back further? No.
If you want to go back further, you can tell us the whole story.
I'm kidding. Okay, well, yeah, grade 12. So I was born and raised in Calgary, and went to school at University of Western Ontario, and often tell and admit to my friends, how did I pick that school? Well, it's because, quite frankly, they accepted me before anyone else did, and they offered me residence, and I had to decide before I had heard back from anybody else. But it chose to be a great decision, because I enjoyed Western, enjoyed the Ivy School of Business. And then after that, my career progression is, I want to say, in some ways pretty simple. Between my third and fourth year of university, I was a summer student at ARC Financial. And at the end of that summer, they offered me a spot as a junior analyst on the team. And so joined the firm back in the mid to late 90s, and spent time in all the different areas of ARC. And we can elaborate on that in a second, the different investment areas, and developed my career, ultimately getting to the position where I am today as CEO. So really one company man from start to finish. So it's been a great ride and a great partnership to be associated with.
That's a rare thing these days, to find someone who's spent their majority of their career so far in in one company, but I think it's a testament to you and to the quality of ARC as a company. Now, what were you always interested in business and finance and banking, et cetera? Is that something did that evolve through your university years?
No, I always had an interest in business and banking and finance. And although I will say it's improved today than when I was a student, I still spend part of my time helping undergraduate students try to figure out what the different areas are within finance, for that matter. I mean, I found when I look at some of the other people that I graduated with, it was a very narrow lens at which they looked at the opportunities in the finance world. And if you really understand finance and all the different areas, there are lots of different things to do for lots of different people and personalities. So I think I got a little bit lucky. Quite frankly, I ended up at a firm that was heading in a direction that I ended up very much enjoying and wanting to do. But I think there was some luck as much as there was some intentionality to that decision.
Yeah. Was there any risk of losing you to Toronto? Obviously, you had the job at ARC as a student, but had it always been the plan to come back to Calgary, Alberta, or was obviously Toronto as the center of Canada's universe? Was there a risk we'd lose you there?
Other than my girlfriend at the time, which was now my wife, is from Ontario. That's probably would have been the one thing that kept me there. But the good news is I had a job in Calgary first and foremost, so she made the decision to follow me out here, which has worked out tremendously well. And I was always interested in energy, and in part, my dad worked in the energy business. But I kind of discovered early on that one of the interesting things about the energy sector, would say when compared to other sectors, is it is capital intensive. And if you want to get into the investment business and put yourself in a position where you can do lots of interesting things and deploy lots of fairly large amounts of capital, the energy business is for you. Not a lot is done in the small scale other than technology in the energy business. So I was very much drawn to that and drawn to that identity that Calgary and Alberta had in that area. Of course, being a Calgarian.
Yeah, well, we're glad you got the job first, then. So our benefit. Brian, could you share with us your leadership philosophy? What are some of the values or principles that you apply in leading your team and your organization?
Yeah, so it sounds a little cliche right off the top, but it really does matter. If you can hire the very best people, you're off to a tremendous start. I often give advice to first-time CEOs that are building a brand new startup and remind them that that's probably one of the most important decisions that they will make, is the people that they surround themselves. So we put an inordinate amount of effort into hiring, even if it's a summer student or first year or anybody into the firm. That's a very important decision for us. We're looking to hire the best, not only from an EQ point of view, but an IQ point of view and a fit point of view and a diversity point of view. So really, if you can surround yourself with some of the best, and when I say the best, I do mean that from a diversity point of view. And when I say diversity, I don't simply mean male or female. I think there's many other ways to look at diversity. There's young and old, there's analytical, there's creative, there's outgoing, more introverted people. And so if you can get a nice diverse set of people around you, it means you'll probably disagree more than you would all collectively agree, which at times causes friction, but that is the benefit of diversity. So hire the best people with some diverse thought leadership around you. Then I think what's really important, and is actually something that is arguably easier to do in private equity, say, than some other institutions, is get aligned with all your people as much as you can. When I mean that, in your compensation and your reward system. And the reason that's easier in private equity, at least how we've gone about it at ARC, is nearly everyone at ARC is a partner and a shareholder and an investor. And we only win when the fund wins and the firm wins. So it's not in anyone's best interest to simply focus on their deal. It's in their best interest to focus on all of our deals and form great alignment as a team, trying to have success across the board. And then once you're there, if you can create an environment of trust, that's important. And then finally, I think a true investment into people's development and leadership is important. Nearly everyone, including my analyst, works with a professional coach. For example, we regularly complete 360s. We complete annual organizational health surveys. So really understanding where people are at, what's working for them, what's not, providing them with that level of feedback and career development and career progression. That's how you retain them. And if you can hire good people and retain them, then you're off to the races.
A very strong, rigorous approach. I love the fact of picking, the best people and then aligning it with incentives and then finally helping them with their development. It's a very thoughtful, robust leadership philosophy, and also sounds like very much the way in which ARC views its talent and talent development. Do you have a unique process to ensure you get the right people for ARC? Is it sort of a values fit, a cultural fit first sort of thing, and then capabilities, or have you got some unique ways in which you filter in people?
A bit, we do rely on, and this is either people that we work with together or that we invest in as references are an incredibly important piece of what we do. And when we're hiring somebody, and I'm talking about 20 or more references that we will undertake on the person. So this is not just 2 or 3 people. Really wanting to understand them and what they're like as a person. I have a saying, people are predictable. If somebody says, Adam, you're an incredibly hardworking guy, it's unlikely that 1 month from now you're going to suddenly stop working hard, and vice versa. And so we really do rely on references. We're open-minded on an unconventional hire. You don't have to necessarily fit in to the classical financial person mode. Then we do look, of course, very much for people fit, and important as well as somebody that wants to stay in Calgary, have a career at ARC, or here for the long term. That's an important consideration for us. If it's a stepping stone in their career to go do something else, that's probably not a good fit. And we pride ourselves, I think, as a senior leadership team, we've worked together on average for 18 years or something like that. So lots of longevity. So we're trying to hire people, grow them from within, and reciprocally, we want them to have a commitment to the firm when they first join.
Yeah, that's a unique perspective. I think that probably creates some, as you say, longevity with folks in the organization, and also trust and commitment as well, for sure. Brian, are there mentors or experiences that help shape your leadership philosophy? Obviously, you work with some tremendous leaders throughout your career. One of whom is our chair, Mac Van Willigen. But are there experiences and mentors that really shaped who you are as a leader today?
Yeah, there's there's Mac, the founder of our firm, and who I still have the good fortune of getting to spend time with, because he does mentor me actively, and he's taught me a lot. And one of the things that he's taught me is business is complicated. There's not one area of business that you need to get right. It's not decision making. It's not engagement. It's not focus drive. Yeah, it's not strategy. You have to get all those elements of business right in order to have success. And so you can't get caught up in any fad or any moment. You really have to think about the business in a 360 way. And then the other thing that Mac taught me in my career is everyone needs a good pummeling at least once in their career. And you just got to hope you get it early. Just the late pummeling, that is the worst. But if you haven't had a pummeling in your career, you need one, because it does create some humility. It does create some perspectives for risk and in what you do. So, but he's taught me many things beyond that, but those are just a couple of things that came to mind. I've also had the good fortune of essentially having the same boss my entire career. When I was a summer student, my boss was a fellow named Lachlan Curry. Lachlan was our 4th CEO, and today is my vice chairman. And so I had the good fortune of being mentored by Lachlan from start to finish. And if there is anything that he is excellent at, it's mentoring people and developing people. And he really does take an orientation of, if you've got a weakness, let's try to convert it into a strength. He's a fixer when it comes to people, and really wanting to see them develop and grow. And so I've adopted that. And in many ways, it was Lachlan that also got me oriented towards being involved in the community and the nonprofit sector, where I would have come across a couple other important mentors in my life. One being Mike Timms, from Peters & Co. I he and I were chairs essentially at the same time at the United Way. And so really a rewarding experience to be working alongside Mike, especially given all he's done for Calgary and his success in his career. And then reciprocally, Ruth, who was the CEO of the United Way at the time, learned a lot from her just about perspectives beyond capitalism. And so I had the good fortune of having many mentors in my life, but those are four, for example.
Yeah. All of them phenomenal people who I have had except for Lachlan, I'd say, had the chance to work with and learn from as well. So you've had a tremendous group of people helping shape Brian, for sure. Brian, what's a day in your life look like as a CEO? People are always interested in routines and habits and things like that. Do you have any key routines or practices that you employ on a daily basis that makes you successful?
I don't. To be honest, I mean, I have other than coffee in the morning, and I'm the type of person that essentially has to have a zero inbox at bedtime. Outside of that, I think to be a good private equity investor, where at times we'll have up to 20 to 25 portfolio companies under our management, you have to show and then of course our investor base, you have to show a high degree of flexibility throughout the day with respect to your routine, because you never quite know what's coming at you and what's happening in the portfolio. In a sense, we run 28 different divisions, all either operating in different areas or different sectors, and so it doesn't set yourself up well for routines. To be honest, to be flexible and nimble in the private equity business.
The no day is like the previous day kind of scenario, right?
Yeah, I think that's right. And then of course we're all active, or many of us in Calgary are active in a very volatile cyclical business too, right? So that means a fair amount of nimbleness and receptivity to shying away from routine, quite frankly.
Yeah, no doubt. Brian, what would be something people would be surprised to know about you? Some sort of party trick or sort of superpower that you've got that people wouldn't know about?
Yeah, I mean, other than I kind of alluded to it earlier, other than I've had the same parking spot my entire career, and so we'll likely start and end with the same parking spot, which is I don't know if that's a bad thing. I might have to change locations just for fun, but I also have a bad habit of enjoying things like TikTok and TMZ and People Magazine. So if anybody ever wants to talk about celebrities, I'm always up for that as well.
There you go. Well, we're talking just after the Oscars here with a rather interesting scenario, so we won't dive down that rabbit hole. But there's interesting to know that you're a TikToker. So we'll wait for your channel to come up pretty soon here. And
well, it's under a code name, so I have posted a few, but you're hard pressed to find them.
Fair enough. We'll keep that on the down low. Brian, I'm sure as you've talked about many mentors in your life, guiding you, if someone were to come to you early in their career and ask for your advice, what would you be telling them about their education, their career path, their ability to contribute to community? What would you encourage them to do or even not do?
I think there's three things I've partly I've observed this because I've got late teens or a couple in high school and two in university, but I've seen how it's shaping up, and it seems worse than it ever was when I was young. This intense focus on what school I go to is going to, what university or trade school or whatever I go to is going to set the rest of my life on a path. And so the anxiety that I see these young people going through around that, I think is just a shame and misplaced. I know where many of the people that I work with graduated from, but the vast majority of people I work with, I have no idea where they went to university. Nor do I care. There's lots of talent you bring post university career that is way more impactful than where you went to university. And so, while it's important to get a post-secondary education, the name of the school and where you go, I think that has become a pressure cooker for our young people today that is probably misplaced and then unfair. The second piece I would say is, to the extent you're starting your career and you have the luxury, and not everybody has this luxury, I would say focus on who you'll be working with and the people you'll be working with, not the firm that you'll be at. And I think that is a mistake. People come out early in their careers with a list of big name firms that they feel they need to get into to get their career started. And I would much rather be working for an unknown firm working for a great guy or gal as my boss who's going to take me places than working for a big name firm only to be working with a jerk, or as I like to call them, a boss hole. So I think that's another piece of focus. And then, early in your career, look to get involved in community and something outside of your day-to-day responsibility. It'll shape you as a person. It will allow you to think differently. And I think it's important. We all can find the time to do it, and we need to find time to do it. And it's needed. And on that, you don't have to donate, $500,000 or $1 million to get involved in some of these organizations. They're looking for talent.
Mm-hmm.
And so don't be shy. If there's a place you want to go and be involved with because it's a passion of yours, approach them. And I think it'll turn you into a better business person over time.
Yeah. Yeah, I remember our former Lieutenant Governor Lois Mitchell always talks about time, treasure, or talent. You can give, one or a combination of all three in terms of the organizations and issues you're passionate about. And as you say, it's not always about cutting $1 million check. It's contributing smaller amounts, but also ideas, time, sitting on boards, etc. So,
especially early in your career, you will get an opportunity to do things at a nonprofit early in your career than you will at your for-profit business, and it will just make you a better business person, and quite frankly, I think a more rounded person just in general.
Yeah, I'd agree. That's been my experience in the nonprofit roles that I've participated in my career for sure. Brian, we'll pivot a little bit to ARC and to energy investing. You've shared a little bit off the top about ARC, but if there's anything else you want to talk about in terms of its focus, its history, but also maybe dig a little deeper into what ARC does and its investment philosophy and approach.
Yeah, happy to talk about both of those. As I say, it was founded in the very late 80s, late 89, I think. And there were three founders, Mac, John, and Phil. And it was a firm that was very focused on two things. One, a very long-term orientation to the business. And second, a research first approach. And you can see that in the success of what the founders were able to achieve. ARC itself is a 30-plus-year-old business. This is ARC Financial. We also, in the mid-90s, created ARC Resources, also a 25-plus-year-old businesses. And if you think and build businesses for the long term, you are creating a less fragile, more enduring business model that will be able to attract talent and capital in a different way. So that long-term orientation was important to us. And then research first. A couple of the founders were research analysts. They brought that first, and that's been part of our mantra. It's pretty rare for a private equity firm to invest in a research institute like we do. And you can see, for those of you that follow the ARC Research Institute, the thought leadership that comes out of that, which we benefit from as investors for sure. And then finally, the other vision for the business that I think we've been able to, under their founders' leadership, pull off in spades was originally why are these great Calgary or Alberta-based businesses having to fly to Toronto or New York to raise capital when they should be able to raise it here locally? And so it was as much a desire to bring private capital to the Canadian energy business in our own market. And having been the first private equity fund raised in Canadian private equity market back in the late 90s, we've certainly been able to do that. There were others that followed, and then there was a vibrant capital market scene here. So that really was the idea. Why are we seeding this business all to Toronto or New York when it really should be done here in our own backyard? Then you asked about our investment philosophy. Well, I'd say that's been refined over time. We very much lead with, as I said, our deep in-house knowledge, focus off areas where we think we can lever off that expertise and knowledge, including the relationships. First and foremost for us is when we are looking at something is the management team. We have a saying, people over projects. I'd much rather have great people with an okay project than a terrific project with bad people. And unfortunately, I've had to learn that a couple times in my career. We want to be very proactive, invest in originating our own investment opportunities. I think that takes hard work. It takes time and a willingness to hang around the hoop. But that's often where the best opportunities surface themselves. And then be a value-added partner to the businesses that we invest in. We try to characterize ourselves as much as possible as company builders in addition to investors. And so that means finding a management team that you're aligned with, that wants to work with you in that capacity, and then bringing forward that effort and leadership in a dedicated way to help them grow and think strategically and holistically about their business.
Yeah, no, that's great. Brian, in broad strokes, what's the energy investment landscape like these days? And we can split that into oil and gas and then energy transition sides of energy investment. But what's it like? You've got to raise money for your fund and then go out and deploy it. So what are you experiencing on overall in terms of those two dimensions, and then again in the sort of more traditional oil and gas hydrocarbon side, and then the energy transition?
Yeah, I mean, so interestingly, it really is the tale of two markets. I mean, you have to split them into two. With respect to oil and gas opportunities, what I would tell anyone who will listen is not only is the industry as profitable as it's been in my career at this particular point in time, and actually even was before oil prices ran up to $100. So this is kind of hyper profitable right now. That's all combined with what are the lowest valuations that I've seen in my career. So incredible cash flow generating capacity with very low valuations and high yields from an investor point of view. You compare that to energy transition, where valuations are quite different. And it does depend on the sector. I mean, energy transition is a very broad word, and there's all kinds of ranges of valuations within that sector, but higher valuations, but quite frankly, a much more exciting growth story. And so you have to buy in and believe in that growth in order to justify the valuations that you have. In terms of investor appetite, that is a really, it depends kind of question, because there's some that are drawn to the sector in both areas. They see this energy transition as call it a once in a lifetime way to find opportunities. There'll be dislocation in a transition, and so the best way is to sort of expose yourself to both, knowing that the timing of the transition is highly uncertain. And so go to kind of make a singular bet on one versus the other, you're probably introducing unnecessary risk into your portfolio by not trying to diversify. And it's now easier to diversify as an energy investor because you do have these tailwinds bringing up energy transition, whereas before often you were just limited to the fossil fuels or oil and gas. Having said all that, there are certain institutions with stakeholder sensitivities that are choosing to shy away from oil and gas, which I think is creating some of the valuation levels that we're seeing, and going to either one side or the other. So very emotional time with respect to energy, especially when you're out talking with people in capital markets, because they all have a view, and in many cases the views are different.
Yeah, it's complex. Lots of dynamics that are not like they were in previous runs or strong periods. A lot of sort of decoupling and shifting sentiment publicly and across large institutional investors. It's a complex time. Not an easy job, both either to raise funds or to deploy them in a way that's going to generate some of the, where to place those bets going forward in the future. It's a complicated task you've got in front of you and your colleagues, for sure.
Well, yeah, to steal a phrase from Jackie Forrest, who runs our research institute, we are going through an energy transition. It's a very disorganized energy transition. And I think that's what's going to create opportunity, but it's also going to create a lot of volatility. And so investors have to be patient and cognizant of the volatility that they're seeing in the sector. And a lot of that volatility is going to show up in valuations and investor enthusiasm. So you best, I think, play and be oriented in the long game right now with respect to energy investing.
Yeah, it is volatile. I think as Peter has written many times in his books, that transitions are messy and bumpy, not orderly. And we're in the midst of that right now. And today we're talking the day the federal government's released its emission reduction plan, which is, I think, rather rooted in some alternate reality in terms of the emissions reduction for particularly the oil and gas sector. But it's something that we need to decide, as a nation, amongst the three ways of doing something good, cheap, and fast. You can pick two, but not three. we have to really figure out how do we make it as reduce the volatility as much as possible to create some security, some stability, affordability. Because if you try and crunch it through in too fast a time frame, I think you're at greater risk of some of that volatility we're talking about. So,
I'll just add to that, Adam. I mean, if you want to put the responsibility on capital markets to be part of ensuring that this energy transition occurs, and I think that's a fair request, it's going to require the long-term oriented investors take a proactive role in investing in both sides of the house.
Totally. Yeah.
Particularly natural gas, the backbone that will support energy transition, and a long-term view. I mean, if the only investors that show up into this energy transition are ones that are measuring results day over day or quarter over quarter, it'll make the executives and the boards of these companies, it'll put them in a very difficult position to think about their businesses with that long-term energy transition requirement.
Mm-hmm.
So it's going to take capital markets stepping up with that long-term orientation to ensure that we're successful as well.
How would you characterize, Brian, in terms of, you're out investing in energy companies? How, if as you talk to executives in energy companies, how hard is it, or how hard are they finding it to raise capital, and what are they needing to do to really demonstrate to capital markets that they are a worthwhile investment?
I don't know if it's the hardest it's been in my career, because they're probably, at this moment, there's the lure of the profitability, but there's also the fear of, how long this will last and what's happening with oil demand. So if it's not the hardest, it's one of the hardest. And then you layer on ESG on top of that, and as I said, some of the emotions around oil and gas investments. And so it is very difficult, and you can't be average any longer. You need to bring forward, I believe, a combination of two axes, if you think about it. On the one axis, you have to bring forward a business model that is rooted in a strong ESG orientation. But then on the other axis, it really has to have that level of profitability and economics to support it all. It's not sufficient if you've got a business that goes all in on ESG and ignores profitability and the economics. It just won't be sustainable. And likewise, if you have a business that is simply all in on profits, investors will shy away from it because they'll view it as a fragile investment with some real risk to it. So I think you need to be doing both well. In fact, a phrase that Mac had coined was ESG, the economic ESG. And often I think it's that first E, the EE object ESG, that's forgotten. Sometimes either the marketplace or society, they want to go all in on ESG, and they have to recognize that you need that sustainability piece to it. And CEOs know this, and they're trying to find the projects that do both and do both very well.
Yeah, that's a great segue to talking a little bit more about ESG. And I was about to add the Max EESG if you hadn't gone there first. It definitely, none of this really makes any sense unless it preserves the economics and the returns and frankly, the affordability of it all has to be grounded in that reality of economics. So I totally agree. You've talked a little bit about ESG and what it's like for what companies have to demonstrate. What are you seeing from some of those considering putting their equity with ARC in terms of how you are filtering ESG into the decisions you're making? What are they wanting to see from you when they're placing their capital with you?
Yeah, no, it's a good question, Adam, because our capital base is primarily endowments and foundations and pensions. So some of the shareholder groups that are most sensitive on ESG. And actually it was, and this is something actually ARC's been at for well over a decade. And I would say is the combination of two things. One, our research institute having the thought leadership to take us there early, well before people were talking about it. And then second of all, our institutional base, wanting to understand how we were thinking about it. And very early on in this transition, say to ESG, as I said, well over a decade ago, we made a commitment to do a couple of things. One, I was saying what gets measured gets done. And a lot of it was relatively easy. We just started to measure things in the portfolio, not only carbon intensity, but water usage and other things at the portfolio company level, measure and then compare. And we were giving our portfolio companies access to relative information that they didn't have back in that day. And presenting to any CEO that their third quarter on any measure will force some competitive juices to have them improve. So we started to measure, and what gets measured gets done. And out of that, you can set targets. And we were very early in trying to do that. And I'd say relatively early into that journey is when we made a commitment to our investors, that on average at the ARC portfolio level, our carbon intensity will be below the US average. So an investment into ARC was simply helping bring down the overall carbon intensity of the North American barrel. And that was something that meant a lot to them, and I think helped them with their own stakeholders understand why they should continue. I mean, the last thing I'll just say about ESG is even I actually, call it 10 years ago, almost was a bit of a skeptic. I thought, is this something that we're just doing for investors, or is this something we're doing for real? And after a little bit of learning, I came to really do appreciate that getting it right is not, this is not a fundraising mechanism. It's also just smart business. And if you allow me a second, I'll elaborate. It's not just about the E, it's about the E, the S, and the G. But let's talk about the E for the second. Forget if you simply want to do it because you feel it's the right thing to do from an environmental point of view, and I do, by the way. But if you want to put a capitalist spin on it, it takes energy to make energy. And so the less energy you can use in making that energy, the lower cost you will be. Not only the lower carbon you will be, the lower cost you will be. And that's just good business. S, and we can talk more about S, but S is things like safety and having stakeholder support in the areas that you work. Who doesn't want that in alignment and ensuring that people are safe and fully engaged? And then we could go on about good governance. So doing all three aspects of ESG well means you're building a less fragile business and ultimately, I think, a more saleable business. So while our investors are absolutely demanding it and wanting to know what we're doing in this area, it's easy for us to do because we really do believe it's good business.
How has it changed in your view, Brian, over the past 5 years, it being ESG, in the sense that I think for many years it was viewed the E was in 98 font and the S and the G were in 2 font. It really was not about environment, it's purely about carbon and about emissions. Are you seeing the fonts get a little bit closer in similarity of size? You talked about S and G being important, but we're seeing greater focus on initiatives like economic reconciliation, diversity and inclusion. Those are very much aligned on the S side. How has it shifted in the past 5 years, or is it still largely an emissions and a carbon measure?
Well, if I think about it, it probably started first with G. And if you go back, call it 10 years ago, it was all about governance and good governance and making sure we have good governance. And then we started to add in the S and the G, and you're absolutely right. E had we sort of stopped talking about G because that became the table stakes of just running a good business. And then E rose to prominence. And I'd say the S is catching up, and maybe even throw energy security into that S. I don't know. But I'd say it's changed a lot. I don't know if it's 50-50 or a third. But I'd still say the dominant focus is on environment. But you will find smart investors are asking you good questions about what you were doing on the S side. Not every investor is focused on that, though. Some of them are still hung up simply on E, but the talented investors that I spend time with are asking questions across all three, and they're weighting them almost equally.
That's interesting. Are there new questions they're asking that are emerging that you're finding that you need to build into the frameworks that you weren't in previous years? Anything of particular note?
I would say they're getting more specific. I don't know that, like, you use diversity, for example. We used to get questions about diversity within our partnership and our portfolio companies a decade ago. Now they're wanting the statistics. And so I'd say they've gone from, in some of these areas, from it being, and you probably include the carbon side of the equation in this, from it being a qualitative discussion to a more quantitative discussion where you can represent that you're doing these things. And so it's kind of back to what I said before: what gets measured gets done.
Brian, ARC has added energy transition to the fund mandate. Can you tell us a little bit more about that and what kinds of companies, technology solutions you're starting to consider now?
Yeah, so this is a good question, Adam. And for some that have known ARC for a long time, they will know that we have invested in energy transition in the past, as early as our second fund. And we're now, for context, we're now managing our ninth fund. We're actively investing our ninth fund. And so funds 2 through 6 had a call it clean tech and at the time, renewable focus. And we were probably a little bit too early to the clean tech side of things back then, and those ended up being challenged investments. But we had 3 very successful renewable power developers that we backed and helped build, and generated on a combined basis very attractive returns to our investors. But that was back in 10, 12 plus years ago, and at the time, many of our investors were quite nervous about that sector because it was viewed as highly subsidized, and it was, because the technology cost curve had not taken hold. And so we chose together to take a pause on investing in renewables in our 7th and 8th fund, and refocus simply on oil and gas fund. And then when we came around about 3 years ago to raise our 9th fund, essentially that same investor base said, maybe we should go back and take a look at what's happening here in renewables and energy transition, because it is a different time today than say it was 5 or 10 years ago, because things like ESG is not going away. This capital is going to be invested in this sector. The cost curves make it very different today than it was. So it's an entirely different proposition today than it was 10 years ago. And so with our 9th fund, we have 3 mandates. It's upstream oil and gas, oil field services, and energy transition. And you asked energy transition is a broad, very broad, kind of almost casually used term. What areas are we focused on? Well, we led off again with a classical ARC approach, very research oriented investigation. And so our research team looked at 20 different neighborhoods across the energy transition area, and we narrowed it down to 4 areas that we thought were interesting, where it married up from not only a opportunity set, but also from a policy and growth perspectives. And those would be carbon capture sequestration. And, we can talk more about that and Alberta's position in that later, but that's going to be a huge, if we are to achieve net zero by 2050, it won't be without the intensive help of carbon capture sequestration. We also were very interested in biofuels and renewable natural gas for a variety of reasons, but for your listeners, the one very simple reason is a biofuel or renewable natural gas can simply slipstream into existing infrastructure. You don't have to rework the energy infrastructure to make biodiesel work, for example. Right. You can plug it into the same car or pipeline or what have you. So it makes that, in our minds, an interesting opportunity. We think renewable energy developers, given what's happened in solar costs and wind costs, you have to play it a little differently, maybe in the past, but that's an opportunity given the build out there. And then finally, akin to what oilfield services is to upstream, we have a focused effort on what we're calling renewable services and manufacturing. So those businesses that will be servicing and providing goods into the energy transition, very akin to, finding those businesses that are making the pickaxes into the gold rush. So those would be the 4 neighborhoods that we're focused on.
Yeah, that's very, very exciting. Lots of potential for all of that here in Alberta. I would definitely agree. Brian, let's move to our final segment, which is sort of pivoting to the long-term outlook for both Alberta and ARC. But continuing on with that theme of your broadening of the fund mandate, energy transition, and think about Alberta. What do you see unfolding in Alberta with respect to energy and energy transitions? What are some opportunities, some bright spots in Alberta with respect to forms of energies or types of companies? And where do you think we need to focus on in terms of ensuring continued Alberta competitiveness?
Well, I think we need to keep the gas pedal on the policy support in a way, and I don't want to get drawn too much into specifics, in a way that doesn't create policy bureaucracy as well. And as much as we can marry up provincial policy with federal policies, and then make sure it's competitive with North American policies, because we can easily get ourselves into a made in Canada solution that is unnecessary, is going to attract a lot of capital into the US because they have a more competitive or simpler or more straightforward policy. And so I think in many cases we don't have to invent our own. We can look south of the border for a lot of these good ideas. And there are segments of energy transition where I think the US is outpacing us from a policy point of view. But that's a topic for another day. And I know the policymakers are trying to get it right. This is something that they want to play on. And then when it comes from Alberta, I think it's just we have to be on our front foot when it comes to executing in these areas. There's just absolutely no reason we should cede, in my mind, the high ground when it comes to being leaders in Canada in the energy transition space.
Mm-hmm.
We have the technical people here. We have the energy entrepreneurs here. We have the legal and banking system. We have the investment bankers. On top of that, we've got the pore space right under our feet here in Western Canada. So harnessing all that in a very supportive way, and being out telling the other parts of Canada, the other parts of North America, what we're doing in this area, so that we don't get sort of left behind or branded in the wrong way as being part of the old form of energy. I mean, if you look at this is a North American stat. If you look at the amount that's been invested into renewable energy in the last decade, the biggest sector to invest in the space has been upstream oil and gas.
Yeah.
And so we have to continue to support these businesses and encourage them to not only properly steward their existing investments into the reserves and fossil fuels, which will provide the backbone into energy transition, but also encourage them and help them get there.
Yeah, there's definitely so much potential, both on for the broad energy transition overall, both with continued success in the oil and gas sector through innovation and technology, pivoting to things like hydrogen, low carbon hydrogen, use of SMRs, emissions reduction. There's just so much potential here for the future. It's an exciting time. Brian, you and I have chatted a little bit about how the pandemic has changed the nature of work and leadership. What are you seeing? What are you doing differently post pandemic as we return to the office and people working from home remotely? Lots of people working for companies that aren't in their home city; they just work remotely. Anything you're doing differently from a leadership or staff recruitment and retention standpoint?
Yeah, I'd say the part that, like a lot of organizations, we've allowed flexibility into the organization in terms of working from home and working a little bit differently. It's not something I would have ever thought would work before the pandemic, and then in a sense I was proven wrong. And I honestly can't evidence that our productivity, if you just want to measure it on raw productivity, slipped over the pandemic. But what did slip, and that was just hard, because we're forced into it without a lot of time to reflect, is I'd say 3 areas in terms of how you communicate with each other, how you provide proper recognition across the firm for great work, and how do you really be intentional and give people the feedback that they need to continue to develop and grow. And I think if we are going to go to a more flexible work environment where we're not always together with those collisions in the hallways or heading to meetings together, or the big town halls, you're going to have to be very intentional about how you do those things, how you communicate across the firm, what's happening, how you recognize people in great performance, and then quite frankly, if you're running from Zoom meeting to Zoom meeting, you're not going to have time to give people feedback. And so you either have to be intentional about it, make space for it, or you're going to have to structure your day differently, because that's what fell apart. People were just booking each other back to back with really no chance to even really say thank you.
Yeah,
right? Just we were so quickly, and so that part's gonna take some refinement.
Yeah, it is a different world. We'll see how it blends now that many of us are back in the office and trying to bring that culture, coaching, development, recognition, appreciation piece back into to some degree, a hybrid approach.
By the way, if we can get that piece right, and I'm confident we can, it just takes some intentionality and some creativity. I think we'll get more on the productivity side than we had before. I've gotten more out of some of my partners during the pandemic than I did previously, because they were provided with that flexibility. So I think there's a real win for organizations coming out of this.
Yep. Yeah, absolutely. Brian, what are you most excited about for the future of ARC and its next 30 years?
Well, I mean, I'll humbly try to say, I suppose, it's not going to sound very humble, but I really do think the best is yet to come. We've got the good fortune of a very supportive LP base, and I did say earlier, some of them have sensitivities and are under pressures with respect to what areas of energy are of appeal to them and their stakeholders. Nonetheless, they are very supportive and interested in where we're going, and seemingly interested in wanting to go in that direction with us. And then, as I said, and as Peter Terzakian's talked about in his books, a disorganized energy transition might just create the best investment opportunities of our lifetime. It's going to be hard to get them right. It's going to take patience. It's going to take some diversity, because you're not necessarily going to know exactly which segments of the energy complex are going to win and when they're going to win. But I think the opportunity set in this changing environment is going to be excellent. So as a long-term oriented private capital investor, we're very excited about the future that we see. So we're trying to leave ourselves in a position as market leaders, and that means staying in front of our investors and maintaining those relationships, and also maintaining relationships with the entrepreneurs in the energy segment within Canada, and to a certain extent within North America, so that we can find the best opportunities and work with them and help them grow.
Sure. And what are you most excited about for the future of Alberta?
I'm hoping that I'm an optimist, and I'm optimistic that over time, with a bit of a deeper reflection, Canadians and North Americans are going to get excited about the energy business that they have, particularly Canadians in their backyard, start to become very proud of our energy resource, regardless of what it is. We are bringing good, clean energy to the world. It's a democratic society. We've got very 100-year-old established regulations and safety mechanisms in place. I think we're doing ESG as good or better than anyone. We've got a tremendous opportunity to fund and support the next round of lower carbon energy. And so I'm hoping Canadians can really embrace what we have here in Canada as a stable, secure, and well-informed and a group of energy individuals that are trying to do it right. And if we get it right, we'll help the world get it right.
Mm-hmm. Yeah, there's a real global opportunity for Alberta to play a leadership role here if we get it right and create the right environment and take the right global mindset. I totally agree. Brian, thanks so much for joining us today, for your leadership in Alberta with ARC and with BCA, and really appreciate the insights and behind the scenes peek as to Brian Boulanger and his career trajectory. Thank you.
Yeah, well, thanks, Adam, for the time and the interest, and again, as I said, for what you and BCA is doing for our province.
Well, thank you for joining us for this episode of C-Suite Unplugged, an Alberta Better podcast series. This podcast is a production of the Business Council of Alberta, and you can learn more about us at businesscouncilab.com. And we'd love to connect with you on social media, so give us a follow at BizCouncilAB on Twitter, Facebook, and LinkedIn. And if you liked this episode and want to support our message of shared prosperity for all, please be sure to head over to Apple Podcasts, Spotify, or wherever else you get your podcasts to subscribe, rate the show, and give us a quick review. New episodes drop every other Tuesday. Thanks for listening. We'll see you next time.